Welcome back to TeshKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording has continued to hold above the 20-day MA here on the 4-hour chart. We have also continued to obey the Elliot wave structures, where we have fully maximized our target areas to the lower side in the formation of this higher Elliot wave count 4, and now my primary scenario is that AGIX is going to continue gearing up in the formation of this wave 5 and also fully maximize our target areas. And before I get further into the technical analysis and also give you my next price targets to the upside in the formation of this wave 5, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our lower low down there, we started that massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in red, having the first wave giving us a peak at around the $0.13 mark, and after seeing that high, we saw a corrective structure in the formation of that wave 2, and after seeing the low for that second wave, we started this massive bounce to the upside in the formation of that wave 3, in a move that has now given us a peak at around the $0.8823 mark in what I'm terming is the high for that wave 3. And in the formation of that wave 3, which is an impulsive wave, I also expected to see this 5-wave structure in formation, where you can see that I have this Elliot wave structure in yellow, having the wave 5, fully maximizing our target areas to the upside in the formation of that wave 5. And after seeing the high for that wave 3, we expected the formation of this wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.3H2 and the fib level 0.5, and I marked that target area using this yellow target area, which is a target area that we fully maximized. And now I believe that there are chances of continuing to gear up in the formation of this wave 5 and sketching out a minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gave me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.8287 mark, and that is the minimum that we can expect that wave 5 to the upside to do. And once we fully maximize that, then we can term this as an even larger Elliot wave count 1 to the upside. And getting a little bit into the details of the formation of this wave 5, which is an impulsive wave, and because of its impulsive nature, I'm also expecting to see a 5-wave structure in formation within the formation of this wave 5. I believe we are seeing such a scenario over here, where you can see that after making our low in the formation of that 4th wave, we saw that bounce to the upside, giving us a peak at around the $0.5 mark in what I'm terming as that first wave. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, and after seeing the low for this second wave, whatever we expect next is that bounce in the formation of that wave 3, then expect a wave 4, and then push even higher in the formation of that wave 5, and getting to see whether the second wave down here has done the minimum that we expect a second wave to the lower side to do, by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which is a target area that we fully maximized. And yesterday, after losing the fib level 0.618, I had to extend my target area back to the fib level 0.78, which is still a valid minimum retracement area in the formation of this wave 2. And after we fully maximized our target area in the formation of this wave 2, I'm now expecting that bounce to the upside in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.64143 mark, and that is the minimum that I'm expecting AGIX to do here on the short-term scenarios. And for that move to also play out, we need to continue holding above the 20-day MA, continue gearing up, and also see a break above the wave 1 high, which is at around the $0.5 mark. And once that happens, then that will be enough confirmation that whatever we are seeing is the start of that massive bounce to the upside in the formation of this wave 5. So that is what I'm expecting here on the short-term scenarios. And I also need to give you a worst case scenario that can also play out, because you can see that in the crypto market we are seeing a bit of a breakdown to the lower side, and in case that move also plays out here on the AGIX chart, and we lose the 20-day MA, continue pushing lower into our yellow target area, lose the fib level 0.78, continue pushing even lower, then there are chances of making one more new low in what we could term as the low for these higher Elliott wave count 4. And in case such a move plays out, we can also be able to sketch out a new target area for the breakdown targets in the formation of that higher Elliott wave count 4, in case we see a breakdown also here on the AGIX chart, by connecting the Fibonacci's from the low of the second wave to the high of that wave 3. And that gives me a minimum retracement area in the breakdown targets between the fib level 0.5 and the fib level 0.618, which lies between the $0.35578 mark and the $0.28212 mark, and that is the minimum that we can expect that fourth wave to the lower side to do. And in case such a breakdown plays out, then I'll be terming this whole structure that we have right here as a massive ABC corrective structure, having that as the wave A, then a wave B, then I'll be expecting one more leg down in the formation of that wave C to fully maximize the formation of these higher Elliott wave count 4. And in case such a move plays out and we see the low for that fourth wave, then we can expect our massive bounce to the upside in the formation of this wave 5. But I still have confidence on AGIX, where I still believe it's going to continue obeying the Elliott wave structures, continue holding above the 20-day MA, and also give us that pump in the formation of that wave 5, and also fully maximize our target areas. And also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 54 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.